SCHG is a well-balanced growth ETF that produces massive gains with razor-thin costs. You guys have been asking me to make a video about this one more than any other ETF in the comments. And while I may be a little overdue, it's better late than never. In this video, we'll cover the key metrics of SCHG, and as always, we'll be comparing it to the stiff competition in the growth ETF world. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please devastate that like button, subscribe if you haven't already, and drop me a comment below with your thoughts about SCHG or any other ETFs that you would like to see covered on this channel. Before we dive into this one, I'd like to give a huge shout out to the 5 new channel members. Thank you to Eric J,
Damon17,
Live to Learn, DRR Gill or Dur Gill, and Lance O. Welcome to the Financial Freedom Friends. I really do appreciate your support. And last thing this week, and I know it feels like a lot of housekeeping, you guys, but just know that I will never push or support a product or service that I don't believe in. So this type of thing will be extremely rare outside of my Sunday shoutouts for new members. I'm happy to announce that I've entered a partnership with Seeking Alpha. And as you guys know, Seeking Alpha is my favorite site to research stocks and ETFs online. I've gladly been a paying member for Seeking Alpha Premium before this partnership, and it's where I do most of my portfolio research as well as all of my portfolio aggregate tracking. If you would like to give Seeking Alpha Premium a try, feel free to use my link in the description below. You can try it for absolutely free for 7 days. Poke around out there, see if you like it, and if you do, you can save $50 on your first full year of a subscription. Okay, it's that time. Let's grow. SCHG Basics. SCHG is the Schwab US Large Cap Growth ETF. It seeks to track the performance of the Dow Jones US Large Cap Growth Total Stock Market Index. This is a well-diversified index that selects growth stocks from 750 of the largest US companies by market cap. It screens for 6 metrics, including the following: the projected 3 to 5 year earnings growth, the trailing 5-year revenue growth, and the trailing 21 quarters of earnings growth. Then it does some other math wizardry to narrow down the holdings to about 250 companies. The most important aspect here for me is that it's passively managed. We're not relying on human gut decisions with this thing. Another thing that I love about SCHG is that it has a broad collection of growth stocks, including each of the Magnificent 7. I know a lot of people that have a problem with other growth ETFs that don't provide exposure to all the big players, and SCHG has you covered there. I differ in this opinion because the results will speak for themselves as things play out over many years with a variety of macro situations. To me, worrying about a specific company or two missing from the ETF is along the same line of psychology of hand-picking your stocks compared to rolling with the system's methodology. But I do completely understand the sentiment from an emotional perspective. SCHG Key Metrics. Time to take a deeper dive into the key metrics of SCHG.
I pulled up SCHG on Seeking Alpha, and let's dive right in. So I always start out on the summary tab, and we talked about it earlier, but SCHG has the most competitive expense ratio at 0.04% of any of the growth ETFs that I follow. It is the number 1 in that category. And it also has a nice and juicy $26 billion of assets under management. So we know this fund isn't going anywhere. As we take a look at the holdings breakdown, you'll notice that technology is a hefty 47% of the fund, but this is commonplace for growth ETFs these days. And then communication, healthcare, and consumer cyclical come in anywhere from 12 to 13%. And then you have financials and industrials at 6 and 3% respectively. The top 10 holdings for SCHG are well diversified, and I mentioned earlier, it has all of the Magnificent 7 you can see with Microsoft, Apple, Nvidia, Amazon, Meta, Google, and Tesla. And the top 10 holdings make up 56% of the fund, and there's 251 holdings. I want to hop over to a spreadsheet that I threw together real quick to point out something that I found to be interesting. Okay, so this might just be a me thing, but I was looking at the holdings breakdown of SCHG and QQQM. I consider these ETFs in direct competition because they have a similar makeup. Just like I would compare VGT against XLK, they're both 100% tech, or SMH against SOX. So I like to find like comps, and these two, as you can see, have very similar holdings. But the thing I find interesting here, in my head, SCHG has always been the better diversified holding because I know QQQ follows the NASDAQ 100, which is only 100 companies. So I just assume that it's more top heavy. And as you can see, they have basically the same companies. I think the only difference here is Eli Lilly and Costco. And I believe the other holdings are all the same, perhaps in a slightly different order. But my point here is QQQM has a lot more balance with its top holdings. You can see Microsoft and Apple at about 9 and 8% respectively, and Nvidia and Amazon. You go down the list, but the top 10 only make up 47%, whereas SCHG is very Microsoft and Apple top heavy at 12.5 and 11%. Same concept with Nvidia and Amazon, so on and so forth, to get you to 55.5%. So not a huge difference, but just in my mind, I always consider SCHG more balanced. But in reality, I guess I'm kind of wrong. I've never compared it side by side like this. They both are about half technology. They have a similar sector breakdown. I mean, I slightly prefer consumer defensive to financials. If we want to get nitpicky, I like QQQM slightly better, but they're basically the same on the way that they're broken down at a high level. But I just find the top 10 very interesting. I wanted to point that out. I've always, I guess, been off on that in my brain, thinking that SCHG is a little more well balanced at the top and QQQM is heavy in certain companies. All right, now we hopped over to the charting tab here, and I've pulled up the total return for SCHG along with a few of its growth ETF peers. I threw in a pure technology one of VGT, an ETF with very similar holdings by sector in QQQM, and then another popular growth ETF, VUG. I figure I'd mix it up with the new one here for a comp in one of these videos. So I'm on year to date, and as you can see, SCHG has been the top performer so far in 2024. It's at 9.4%. To VGT's, which is in last place at 6.5%. QQQM is just ahead of VGT at 6.9%, and then VUG is at 8.7%. If we zoom it out over the past year, SCHG is coming in at the top spot again. It's been very good in the recent history. It's at 50.6%. Second place would be QQQM at 50.1%, and then VGT at 47.3%, and VUG having the caboose on lockdown at 46.5%. When we zoom it out over 3 years, SCHG is a solid second place here. We have VGT at 43%, SCHG is up at 40%, and QQQ is trailing a little bit at 38.2%. And VUG is still playing catch up at 33%. Now we're going to zoom it out 5 years, and notice that I put QQQ in place of QQQM because this one has the history to go back 5 and 10 years. SCHG is at a very solid 140.5%, and it's ahead of VUG once again, which is at 131%. Now on this one, VGT is the king at 178 to QQQ's 161. And when you zoom it out a full 10 years, SCHG is at a very respectable 322.9%. Again, ahead of VUG, which is at 290. QQQ comes in second place at 224.5, and VGT is at 520%. SCHG really is a quality growth ETF. I threw in some very fierce competition with two of the best that exist, but a lot of the VUGs and many other growth ETFs of the world get surpassed by SCHG. It's a quality holding.
SCHG Portfolio Fit. As the broken record tends to always say, but just in case you're new here, I think that a modern portfolio should consist of at least 3 types of ETFs. We have cornerstone ETFs to give exposure to the broad US stock market. Growth ETFs focuses on companies with high growth potential, and dividend ETFs focuses on companies that pay dividends. The amount that an investor should hold of each type of ETF will depend on things like their age, risk tolerance, current work situation, goals, and their current wealth. I think that SCHG is a solid pick that can make up any percentage of your growth section in your portfolio. So whatever your growth ETF amount will be, say it's 30% of your overall portfolio, that 30% could be 100% SCHG, or you could do something like 33% each of SCHG, VGT, and QQQM. I always like to throw in this disclaimer when we're talking about these growth ETFs. Generally speaking, if you're in retirement or you're close to retirement, you'll want a nice chunk of cornerstone holdings like VU or VTI, along with a variety of quality dividend ETFs or other dividend or interest producing assets. You'll want your stability to be a little higher at that point. You won't want the roller coaster that growth provides. So there are a lot of better options for you. Now, if you're younger, you can roll the majority of, or at least a nice chunk of your portfolio in these growth ETF options. Having a huge chunk of your portfolio in growth ETFs is a lot of fun when the market's on fire, like this past decade, but it can be extra painful when the rug is pulled. SCHG Backtest versus VGT and QQQ. SCHG has been around since December of 2009. Let's compare it to my two favorite ETFs, VGT and QQQ, from 2010 through 2023. So this has given us a nice 14-year data sample to work with.
I'm out on Portfolio Visualizer to do our backtest. We're going to pull 2010 through 2023, so that's 14 years of data. We're going to be a bit aggressive here. We're going to start with $10,000 in this thing and contribute a fixed $1,000 per month. Reinvest dividends, of course. And then I set up SCHG as the first portfolio, VGT as the second portfolio, and QQQ as the third. Let's hit analyze here and see what we get. So we can see with SCHG, we end up with a final balance of $625,000. Not too shabby. With VGT, you have much more at $864. And with QQQ, you have $783. So it's trailing just behind VGT. You can see that these two ETFs give some separation from SCHG over the years. When we take a look at the annual returns, you can see here that SCHG is the blue bar, VGT is red, and QQQ is the orange. Well, notice in the first few years, QQQ is running away with this thing. I think in the first 6 years, it was number one. And then VGT flipped the script a little bit in the more recent years. And you can see that the blue bar SCHG typically trails the field. It does have quite a few second places involved, but there's a lot of years where it's the number 3 ETF. But again, these are all great ETFs, so it's not to say any of these are good or bad, but I prefer the red and orange bars here. And for the important data, we ignore the dollar cost averaging in, and we're going to look at the annualized returns of the ETFs themselves. In the last 3 years, it looks like SCHG has a solid 9.5%, and VGT is at 11.9 to QQQ's 10% even. In the last 5 years, SCHG is almost sniffing 20%. It's basically right there. And VGT is at 24.9 to QQQ's 22.4. So these two outpace SCHG by a decent margin. And over the past 10 years, we're at almost 15% for SCHG to almost 20% VGT, and QQQ lands in the middle at 17.7. And over the full 14 years, SCHG comes in at a very solid 15.2%. VGT just cracks 18%. And QQQ is actually in a dead tie at 18%. And the reason that VGT ended with more is that QQQ did better early on. It feels backwards, but you were buying more shares of VGT in the beginning years, so it compounded better. But this right here is just taking away the dollar cost averaging effect and showing, if you put $10,000 and just let it ride, they would have been exactly the same over the 14 years. And then portfolio income, not really the point of these things. These dividends are being reinvested up top, so it doesn't change the data. But as you can see here, VGT is the clear winner when it comes to income. Although QQQ is making some nice strides lately, and SCHG, it really has not grown its dividend. It's at 2% 5-year CAGR, I think. QQQ is over 10%, and VGT's somewhere in between.
SCHG is a well-balanced growth ETF to add to any portfolio. I think its combination of extremely low cost along with its solid methodology will produce positive results over any long stretch of time. I don't currently hold any SCHG in my portfolio, but if I did, I would remove a slice of my VGT to make the addition to the growth section. The growth section in my portfolio has consisted of 100% VGT for quite a few years. However, I have been considering adding in a splash of QQQM for a few years now. I think it's a better half-tech growth ETF than SCHG personally, but they're both fantastic. Let me know if you hold SCHG in your portfolio, and let me know why you hold it over the other growth ETF options. I love to learn from the community. Check out one of these 2 videos if you're still with me at this point. I appreciate you riding this out with me until the bitter end. Thank you so much for watching, and this part is still very new. The days have flipped. I'll see you each and every Sunday, and sometimes on a Thursday. Bye.